I'll do this in Danish shortly, and then we'll switch to English. De herrer og damer, velkommen til november måneds live webinar. I dag har vi Matt Delong med. Han er CTO, Chief Technical Officer ved RLT USA. Og så swingtrader han også selv, og en hel masse andre ting, som han fortæller os om. Så nu skifter vi til engelsk, og Matt, welcome. We had a short chat earlier today, and I'm really psyched about hearing what you have to tell us today. I told the crowd that you're, of course, an experienced swing trader. We talked about your different strategies to or approach to trading compared to Jeremy's. Yours is more rule bound. Whereas, what was it you called Jeremy's way of
Jeremy's
trading?
more like so I'm systematic. Jeremy is more discretionary.
Right. Exactly.
Yes,
exactly.
I don't know how you say that in Danish.
No, it's good. I think we got it. I think definitely we have both kind of traders in real trading Denmark, and I think I lean more to the discretionary side. So it is always good to have someone who's more rule bound. So welcome and take it away.
Thanks, man. So thank you everyone for joining. I'm going to share a little bit. Let me share my screen real quick with you guys. This is one of my favorite strategies I'm going to share with you guys, and then I'm going to tell you guys some stories. Once upon a time, story time with Matt here a little bบlater. But yeah, let's go ahead and get started. Let me go ahead and share my screen. Boom, got it. Boom, boom. You guys should be able to see my screen. Is that correct? It's loading. Let's see.
It was there a second ago.
It says it's loading. Come on, load. There we go. So as you guys heard, I am the Chief Technology Officer / co-owner of Real Life Trading in the US. And part of the way I think about things is I think about trading in terms of how can I automate something, right? So part of what I'm drawn to are these systematic, as Peter said, rule-based trading, so that it makes it easy to define strategies and then also automate them. And so I wanted to get a quick feel, and you guys feel from the audience here. Put a 1 into the chat pane if you're very comfortable taking bear trades, bearish swing trades, bearish day trades. If you're comfortable, most people are not, right? It's kind of it feels like you're trying to go against gravity, right? Well, like most things go higher. Well, how many of you guys know in this year, in 2022, this year, that a lot of the money has been made with bear trades and not so much in bullish trades, whether it's swing trades, day trades, whichever your preference is. And so I'm going to show you a strategy that I use a lot. And this is one of the things I love. Peter, I'm not sure if you guys have gone through this, but I want to go through it really in depth with you guys. And that is this trend following strategy. How many of you guys have ever spent way too much time trying to predict where the market's going to go, only to realize you were wrong? Thank you for playing. Give me your money, right? That feels like that's how it is a lot of times when you first are starting out. So Simon is a half. He's halfway. Okay, yeah, got it. So let's walk through this. I do want to share with you guys why I love this strategy so much, and we're going to talk about returns and how well it's worked and on different stocks. But the first thing you need to know there's really 3 reasons to follow the trend. So the trend following strategy that we're talking about here is called MOMO. And at the end of the day, you don't have to figure out where the market is going, right? You don't need to know that. One of the things you do need to do is figure out how to identify the trend and then go in the direction of the trend. So for example, if you are at the bottom of an escalator, where is it going? Well, it's predictable, right? But if you're at an airport, you don't necessarily know which way planes are automatically going to go one way or another as they're pulling off out of the hangar, right? So our money is made by going in the direction of the trend. Of course, there are exceptions to the rule, but being able to follow the trend is super helpful rather than trying to predict it, right? So it doesn't matter if the market's going up, down, whatever, I'm in whichever way it goes, whichever way it's moving, right? Now, the cool part about this is by default, you're going to always hold your winners and you're going to sell your losers. Most of us, when we first start out trading, we get this totally opposite. We're like, I'm going to hold my losers and sell my winners, right? The littlest bit of green, we're going to cut that trade. even though it's winning, we're going to cut it off and kind of take some profits. Meanwhile, we're holding on to bigger and bigger and bigger losers, right? It is what it is. A lot of us have done that. We've been there, got the t-shirt. We don't do that anymore, right? So hi, my name is Matt. I paid a lot of stupid tax. What we're trying to do here is prevent you guys from having to pay a lot of stupid tax. So the other cool benefit is that you're able to take advantage of these little bursts of momentum. How many of you guys have ever seen a stock for no real good reason start getting bought up? You know, people are piling into it, buying it, and there's some meme stocks that tend to do this, and just for no real good reason, just keeps going higher, 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 or lower, lower, lower for no news, no earnings, just randomly keeps moving, right? So in those situations, we're able to take advantage of those little bursts of momentum. So that's kind of the three top reasons to follow the trend, as opposed to like just discretionary trading where we're trying to predict where is the trend going. In this case, we just, wherever it's going, we're in. Does that make sense? Cool. Okay, so here is the way that this works. This is a stock chart. This is an indicator I created, and here in a sec, I'll send you guys the link if you haven't added it to your charts. But again, this is how I think about trading: is where is the trend going? Well, in this case, you guys are able to see that we get this signal right here. So for those of you who have advanced degrees, guess what happens when we see this? What do? Those of you with 6-8-year degrees, what do? We buy, right? So what do? Well, we buy at the close of that candle, right? So we don't know that the trend is going to continue higher, but we do know that the trend reversed. And what happens here is the red and the green lines switch. So those are some just basic moving averages, and they tell us, hey, the trend is changing. You need to go ahead and set up a trade, right? Makes sense? So what we do is we're going to go ahead and say, hey, and here's a zoomed in view of that. We're going to get into the trend, and we're going to stay in the trend until we get a signal that looks like this that says sell, right? So we're going to get in, buy when it says buy, and sell when it says sell. Exactly. So here's the breakdown of this. Okay, you guys ready? This is being recorded if you want to go back. The green line is the 8 EMA, 8 exponential moving average. That's it. Every charting platform, every broker, everyone supports these basic moving averages, the 8 and the 21. So what happens is we're waiting for them to crisscross, and it tells us the trend is changing, right? So if you're not in, you're going to go ahead and get in. You're going to place an order, and you're going to get in at the close of this candle. And we'll walk through some specific examples here in just a sec so you guys can get this. So is this making sense so far, team? Give me a 1 in the chat pane. This is making some sense. Okay, making sense to a handful of people. Got it. Okay, got it. So again, this is just 2 lines crossing. That's it. That's how we're predicting the trend. How do we know which way the market's going? Well, what is the trend? The trend is bullish when you guys can see this green shaded area. When it's bullish here, it's going to be green shade. Guess what color it's going to be when it's bearish? It's going to be red. Exactly. So when the green line's above the red, just like this, we're going to be bullish. When it's flipped, it's going to be bearish. And what we're going to do is we're going to establish a dollar amount. We're going to say, I'm going to spend a certain percentage of my account. And I'm going to buy as many shares as I can at the closing price, at the signal candle, right? At the signal candle. So I want to show you guys a little bit more, and we'll talk in a sec about the specific dollar amounts and how to do the math and all that. But we're going to stay in the trade when we get this buy signal. And I don't know if you guys see this. This, I believe, is a 78-minute chart. So each one of these candles represents a 78-minute period of time. So this actually was one of the biggest trades that came last summer on NVIDIA. So we got a signal to buy right here at the close of the candle. And as long as the green and red is going in the same direction, we're going to stay in. And then you see here, it tells us to get out at the close of the candle. So all this right here was cash money, 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 money. Now, this did take multiple weeks and months to play out. However, I can show you guys some tools, some cool stocks and timeframes that I use this on for shorter timeframes to capture even more dollars, more trades. Now, here's the cool part. How many of you guys would have made a new high in this trade, probably like right here, and you're like, oh, I got to lock it in? How many of you guys would have done that? And he put a 7 in chat pane. If you would have been guilty of trying to lock in. Okay, so so 4 people are being honest. Okay, I got it. I see how it is. So nothing wrong with that. Nothing wrong with locking in trades. Now, obviously, as the market goes lower, you at this point right here, you'd be like, I'm glad I did that, right? You're going to feel like I did the right thing. And you go on to your day, you forget this trade ever happened. But those of us who said, you know what, the moving averages almost flipped, not quite. Again, it's based on the close of the candle. So it doesn't matter what happens throughout the life of the candle, how it closes. That close is what we're really paying attention to. So as it goes up, down, all the drama of gapping up, gapping down, all the gaps down here, like all this stuff tells us, no matter what, our green line is still, the trend is still what? Still blank. The trend is still bullish, right? As long as it's bullish, we're in bullish, we're going to stay in the trend, stay in the trade. Now, for those of you who love to protect your profits, nothing wrong with, adding some stop losses as you reach new highs. As you reach a new high, put some stop losses, have some trailing stop losses. Nothing wrong with that. You will obviously want to protect your gains. Fair enough. But I want to show you guys some cool ways to do this the other way around, and that is with bearish trades. Now, if you guys had to guess, how much money as a percentage do you think was made this year on bearish trades versus last year? Oh, wait, what percentage? So maybe 89%, 80 to 90% this year was bearish versus 80 to 90% last year was bullish. Well, what does that mean? Well, that means the market conditions, when they change, you also need to change. You need to adopt. You need to adapt, right? So one of the things we have to do is, as traders, is recognize, hey, these tech stocks are down 60, 70, 80%. Something's changed, right? You don't necessarily need to know anything else that, hey, things are very different than they were previous year. Things are very different this year than it was last year. Last year from 2020. You guys remember what happened with COVID? The market pooped its pants for a few weeks. And if you got into a trade and you were bearish, you couldn't have held the bearish trade too long, because what happened? It slingshotted. The market went bullish and then just ripped higher. I remember last year, even almost every Friday was a new high. I don't know if you guys remember that. Like, those were the good old days. And there's really 2 environments that I've learned about. It's not bullish and bearish. It's what I call an easy dollar and a hard penny. Do you guys know what I'm talking about? An easy dollar and a hard penny. What does that mean? Well, sometimes there's an environment where every single trade you take just works. And in those situations, I'm going to try to get a little more aggressive, right? I'm going to play a little bit more offense. Does that mean I'm taking a 10R risk? No, but I'm probably going to take more trades than I would otherwise. Now, the other environment is it's what I call a hard penny. What does that mean? It means it's hard to make a penny, right? That means almost every trade you take loses. You guys know what I'm talking about. And it's not necessarily something you can see on your chart as much as the strategies you're using. Sometimes there's some chop, right? Where you're getting into trade and almost everyone loses. Or there's other environments, like for me, August, October, there were several months this year that were every trade just worked, right? And then maybe in September was a little bit more of a challenge, right? And everybody's trading strategy, everyone's environment is a little different. We're not all taking the exact same trade every single time, but you guys know what I'm talking about, where you recognize that, man, every single trade I touch is just, I'm probably going to be a little more defensive. I'm going to be a little more aggressive and maybe moving up my stop. I'm okay if I take a small win, but I definitely, in those environments where it's a hard penny, I definitely just don't want to get punched in the face, right? And so you don't really know what's going to happen, right? You don't really know when is the easy dollar going to switch to the hard penny. You don't really know, right? But all you can do is show up, execute the trades, and then whatever happens, right? So in this environment, guys, you can see this obviously, we had several times where the price action, you would get in at the close of the candle, which would be right here. So we get in at the close of the candle. What happens? It gaps down. Then it has what's called an S curve. It rolls over, tries to go higher, right? Got all the way up to here and then failed, and then gapped down again. Same thing. It went lower, then gapped up a little bit. Still, as you guys can see, what is the trend? No matter all this drama, all this noise, what is the trend? Is it bullish or bearish? Well, if you're not sure, just look at the color, pink, red. bearish, right? And even if the market just kind of starts looking like it's going to rocket higher and do a quick reversal, and then it fails and goes lower, right? Makes a new low, right? So our P&L is looking pretty juicy. If we followed the rules, if we got in bearish right here, down here, it looks pretty juicy. Again, kind of goes higher. What happens the next day? Gaps down, goes lower, and then just kind of chops. You guys can see kind of like a double bottom right there. And then we finally get our signal to exit right here. So some people would say, well, Matt, why didn't I get out right here at the absolute low? Well, you don't really know what the absolute low is. If you guys have figured that out, let me know. We'll all be billionaires tomorrow. No one really knows what the absolute low is. You could have thought that was the absolute low, right? Or that was absolute low, and then you don't know what's next, right? You don't know what's going to happen the next day, next week. And so all you're doing is just looking at this trend. The trend tells us to be bearish, so we're going to be bearish. And we roll over and kind of make a new low. And that right there is the actual low, right? It does double bottom and then builds a nice base and then continues higher. Is this making sense? Okay. All right. So let's do a quick review because I know you guys love learning, love absorbing, love taking notes. What is the strategy? Well, we're using exponential moving average and we're waiting for those two lines to cross. Once they cross, what happens? We get a buy or a sell signal, right? And if we're long, if we're bullish, we're going to get in at the close of the candle, right? Get in at the close, and we're going to stay in that trade as long as it remains bullish, right? So the cool part about this is we are using a limit buy order, right? We're getting into a trade using a limit buy. What does that mean? Well, if I put my order right here, and let's say the market just does go higher and I missed it, there's plenty of opportunities to get in. You guys can see here, if I put a limit order here, I'm able to get in regardless of like if our closing, oops, there's my drawing tool go. So if our close is right here and we get an alert and we look at our phone and let's say the price action is actually down here, what's a unique situation, unique type of order that we can use to only get in if the price action crosses this exact line? We can, now obviously if we put in order right at this exact nanosecond, we'd use a limit buy, right? We're long, we're in a limit buy. But let's say we're going about our day in meetings, taking the kids to practice, football, piano, whatever, right? We're dentist appointments, right? All the things. And for whatever reason, the price action is right here, but we only want to get in up here. Well, we can use a stop limit order. Is that right? What does that mean? Well, that means that we can get in at this price and only this price if it goes higher, right? Now you guys will recognize it did gap up the very next day and it did cross that threshold. So we would be in the trade. However, the beauty of using a stop limit order is if the price is here, we want to get in here and it rolls over and goes lower, are we in the trade? The answer is no, we are not. And that's the beauty of being able to set alerts. And I'll show you how to do all that here in a sec. You can set alerts, you can get into a trade. If you miss it, you can get in at the exact same price. The biggest thing I've seen people do is if price action is a little higher, they're going to jump in at the highest, like wherever the current price action is. Again, it's based on the close of this candle, right? So let's just do a quick example. Let's just say, for example, the close of this is 107.18, okay? And whenever we're able to get in front of a computer and look, we're like, well, shoot, I missed it, but it is lower, 107.18, we can use a stop limit buy, right? Which would trigger the very next day, right? So then we really would never see any red in our P&L in this exact example because we are rocketing higher. And of course, we do get a nice, beautiful candle. Like, look at the size of that thing. And it just goes, our P&L just goes so high, it shoots out the top of our screen, right? And so that's kind of the beauty of this strategy that we're able to do this. Now, here's a question. Matt, you haven't told me where do I put my stop, right? Well, this strategy is actually a little bit different. This doesn't use a traditional R system risk. Why? This does tell you when to get in and out, but this is more of a spend-based sizing. I'll type that on here. This is spend-based sizing versus the risk-based sizing. What does that mean? Well, That means the number of shares you're going to buy is not going to be based on risk. It's going to be based on spend. What does that mean? Well, let's take a look at an example. Boom. Let's say you're going to buy $5,000 worth. Let's say you have a $50,000 portfolio. You're going to take 10% and buy as many shares as you can. Again, in our example is 107.18. So how many shares would you buy? Well, you'd say $5,000 divided by 107.18. Well, Matt, how did I come up with the $5,000? You can spend about 10% of your account. Now, if you're spending $5,000, which is maybe 10% of your account, how much are you actually risking? Well, you're not risking, this is where most people get confused, but you're not actually risking $5,000, right? The stock would have to go to zero for all of your shares, whatever you spent, to go to zero, right? All of it have to go to zero. Well, how many of you guys think some of these big tech companies are going to zero tomorrow? Even the ones that are caught with fraud, and they don't go to zero overnight. They do have a rapid decline, but they don't go to zero, right? So in this case, we're not actually risking $5,000. So let me show you, let's up the ante a little bit. Let's just pretend it's $50,000 worth, right? This is RLT Denmark, so we're all rich. We're just loaded up with lots and lots of dollars. Let me show you guys an example. Instead of $5,000, let's use $50,000. Why? Because we're going to 10x, okay? We're just going to think about this in terms of a $50,000 spend. So again, here's my math. Where did this 107.18 come from? It is the close of that signal candle. You guys remember when I call a signal candle, is that little buy or sell? That buy or sell, right? Those of you with advanced degrees, you can follow along with the buy and sell, right? So here we are. We're going to spend $50,000. Here's our math. 50,000 divided by 107.18, which is our price that we're going to buy at. We can afford 460 shares. Is that math correct? Someone double check me. Should be. Yeah. Good. 466. Okay. Well, there we go. Let's update that real quick. Let me fix that. Give me 1 sec. Let's go in and edit that real quick. Oops. My screen went white. What happened? All my drawings are here. Okay. Sorry, team. Hang on 1 sec.
Did you just break Google?
Hey, when that happens, yeah. All right, let's say 466 shares, 466, 466, 466. So when I originally did this, I set it out at 5,000 and I last minute changed it to 50. Yeah, no worries. Let's see. Boom, boom, boom. Okay. So we're going to, this is what it's going to look like, is we have 466 shares. So here's our example. This is what it's going to look for as we're waiting for that buy signal at 107.18, right? And we're going to buy as many shares as we can with that 50,000, which is 466 shares. So then we're going to stay in the trade. Now, how many of you guys spend at least, let's say at least an hour a day, Monday through Friday, in traffic? Put a 6 in the chat pane. You're in traffic a lot. Yeah. Some of you guys spend some serious time in traffic. Okay. Now, here's the crazy part, is this idea of being able to make money without having to do some kind of manual labor. And it is really hard for my dad, for that generation or older, to really get this idea of, well, you just buy something, it goes up in value, and you sell it and make a profit, right? This idea of I have to work for it, I have to trade a service for dollars. It's really difficult for some people who aren't used to that. I've been an entrepreneur all my whole life, so like I get it. I know how it works. It is what it is, right? And so in this case, what we're doing is we're buying $50,000 worth, 107.18, and we're letting it ride higher, 147.22. Now, Isabella, you asked, how do we know not to use the strategy? And we'll talk about that in just a minute. But typically, after some really good runs higher, usually I'm going to wait, skip the next couple of signals, and I'll show you how that plays out here in just a sec. Okay, you guys with me? All right, so here's what happens is we buy at 107.18 and we exit at 147.22. What is, I'm going to do the math on that real quick. You guys can do it with me. 107.18 times 166, sorry, times 466. 47. About $18,000. $18,000. 658. So what you guys got? 658.64. Right. So not bad for a $50,000 gain or $50,000 spend. Now this did take in our chart here. This did take 26 days. How many of you guys are willing to be patient for 26 days? Right. It does work well. And there, as Isabel mentioned, there are some times, of course, where things are ranging, where things are going sideways. Well, when they're going sideways, what does that mean? It means they're not trending. So here's what it ended up looking like. Oops. Is this this is what it looked like for our gains. 26 days, 18,000 and change, right? Makes sense? So you guys want to look at another example? Let's take a look at another example here. Let me erase my drawing. Is this making sense? Hopefully, Peter, this is making sense. Okay. Okay, so let's say that we want to do this again. Let's say we're going to do this on NVIDIA. In this case, I haven't really talked about the time frame. In this case, this was from a 78-minute chart. You can do 15 minutes. We'll talk through some of the details here in just a sec. But in this case, we're going to buy at 145.38, and I do need to double check my math. 145.38 is 343.9. So 343 shares, rounding up. You can round up, round down. So we're going to buy at the close of the signal candle. What does that mean? Well, you guys can see here, it's really small, but you can set a stop limit order right there. Sorry, a limit order. If price has gone above, you just have a limit order. Now, in this case, you did have a smaller time frame to get into the trade that does sometimes give you 2 and 3 chances to get in. But in this case, you guys, actually, let me zoom in real quick. There we go. I don't know if you guys can see this, it is a little small, but you did have a little, you had a little bit, probably an hour or two to try to get into the trade. Then this is our signal candle, this is buy, and then the next 1 or 2 or 3 gave us a chance to get in. And again, we're just going to have a limit buy at 145.38. If it goes above, we're going to keep that limit buy open, wait for the price action to come to us, okay? So here's the cool part. What do you think happens next? Well, we make some money. That's what happens next. Let's go. So next, same thing. We bought 344 shares. We exited at 210.10. So all the way up here. So again, we got in here, rode this all the way higher, exited at the close of this candle right here. Right, you guys can see there's a little down red arrow there, a buy arrow there, sell arrow there, right? So again, you don't necessarily have to know where the trend is going. You don't need to know where the market's going. You just follow the trend. Now, what do you think happens if we are in a bullish trade and the market gaps down? What do you think happens? Well, at some point, it's going to tell us to exit the long trade and get in short, right? So we're going to give back some of our gains, but then we're going to flip the other direction, right? So that's super helpful to know that it doesn't matter whether the market's going up, down, sideways, we're going to be in regardless of we're going to be long or short. It doesn't really matter what the market is doing. Now, Isabel, this is what you asked about, which is this gotcha. And this is kind of like, some of you guys have teenagers who change their mind a lot. I want this, I want that. No, I want this. This is the gotcha. This is the thing. This is the Achilles heel, the strategy, which is basically you want to exit along, get in short, get in long. And this is what we call the chop. Okay. Now the chop, typically what I like to do is I like to wait once I had a nice, really big run, like you guys see Obviously, the trade started lower. It did exit right here at the close of this candle. So we did have a nice long bullish run and we exited, right? So typically what I'm going to do is I'm going to look for at least 3 to 4 of the next signals. I'm just going to get those signals. I'm going to ignore. I'm not going to actually take action on them. Now, there's no magic number. Is it 3? Is it 4? Is it sometimes 5? You really just have to decide for yourself. However, the way this works, you guys are familiar with Murphy's Law in Denmark. You've heard of that, Peter? So whatever could go wrong, whatever can go wrong will go wrong. So what does that mean? Well, that means if you miss a signal to get in here and it goes higher, you wait. If you missed it, you wait, right? But let's say it does make a little pop higher and it gives you a signal to exit right here at the close of this bullish candle right here. You're going to exit and then you're going to now get into another trade and go short, right? So again, you can be afraid of this chop. You will give back some of your gains during this time frame. It's up to you to decide. In this case, it was what, about 6 little 3 back and forths, bullish, bearish, get in, get out, sell, right? And this is what I have 2 teenagers myself, so I can make fun of them, right? So that's kind of how that works. So again, there's no perfect way to do that. You can't say exactly every 4th time. Sometimes it's 3, sometimes it's 5. But you just have to use a little bit of discretion in what you want to do. Obviously, if you have amazing run and you just want to sit on your huge pile of cash, like Peter has for some couple of really good long swing trades or day trades, then there's nothing wrong with not taking the next few trades. Okay, and again, here's the gotcha: go long, go short. No, go long, go short. So I do want to ask you guys this, and I do have a couple minutes. I want to share a couple stories with you in just one sec, but let's do a quick review of what would have happened if we just bought a few stocks that we're all familiar with. Tesla. If we were to just buy and hold Tesla, this is actually a little bit lower. I did these slides, I think, early September. So what would happen if I bought Tesla at the beginning of January and I just held it, right? So what would happen, and I call this B&H, buy and hold, if I bought, or I think, I think right here, bought at the open on the very first part of the year. We'd actually down a little bit more, yeah. So what would happen? Well, I'd be down a significant amount, right? So obviously from here to wherever the screenshot was taken, you guys can see it was September. I'd be down. It's actually down even more, I think even lower now at this point, which makes this, it's the same point, same illustration. And that is that buying and hold does work, but not all the time, just like certain other strategies. So what would happen if you did MOMO, exactly the strategy we talked about, on a 30-minute chart in the same time frame? You'd be up 49%. Well, here is the exact, here's the exact list of what the equity curve would look like if we were to take every single trade, right? Now, yes, there are some ups and downs, right? You will get back some of your gains during that chop, but how crazy is it that you still make a 49% gain, probably based on like you win 1 out of every 3 trades? What does that mean? That means out of 3-4 trades, 1 is going to be a huge winner, and it's, as you guys saw, the huge winner more than makes up for some of that chop that occurred, right? And so obviously that the percentage profitable depends on how much. The percentage is the same regardless of what account size. If you have a $5,000 account, a $50,000 account, or some of us have bigger accounts, obviously the ups and downs are relative. The numbers don't matter, the percentage is kind of what matters, right? Because that translates into all different account sizes, right? Okay, you guys want to look at another one? What about something you guys are familiar with, like NVIDIA? Again, it's down even more this year, 54%. As of September, down 54%. MOMO on a 30-minute would be up 38%. So team, here's a question for you. What is the difference between these 2 numbers? Please don't say 38%. What is the difference? Is anyone registering? It is a 92, right? So the difference between being down 54 and up 38, right? You add those 2 numbers together, 92%. Now imagine you just bought and held, but imagine instead of that, you did this. The difference between that low negative number and a positive number is a big number. And I guarantee it's even higher, even right now. Yep. So, okay. So it's at 153 right now. So, yeah, still some substantial differences there with those numbers. You guys want to see what that one looks like? This is what it would look like. 81 trades. And you guys, this is the kind of thing I like to see. Like, everyone is afraid of this give back period. But you have to have the courage to take these trades, regardless of how you feel, right? Yes, obviously, if you were to skip some of the 2 or 3, if you had one big win, you're going to sit out the next 2 or 3 alerts, maybe 4 alerts. Obviously, you'd have an even better performance than this. What this does is this is every single long and short trade. Like, you're in every single one of them, right? Like, you're not missing anything. And again, 1 out of 3 are profitable, right? What does that mean? Well, it means you give back some, and then you make a new high. Then you give back some, you make a new high. And this is the process. This, I would love to figure out how never to take a losing trade ever again. However, I haven't figured that out yet. You guys let me know. Send all your comments to Matt at Real Life Trading. Right? If you guys have figured that out. But here's what we can do as traders. We can show up and execute the plan, right? We can show up. We can, regardless of how we feel, regardless of whether we got a good night's sleep, we had a argument with our significant other, like whatever that is, we can show up and execute on the plan, right? And that's really all we can do. Now, you guys, just like me, have limited funds. I have more ideas than I have money, right? That's always the case, that even Elon Musk has more ideas than he has money. That's never going to change. But all we can do is show up and execute, show up, do what we're supposed to. And then over time, we're profitable. Over time, all this stuff works in our favor, right? Now, here's what I do see a lot of people do, right? Let's say they had a couple nice wins, and maybe they're paper trading, and they're like, Matt, I'm going to start doing MOMO right here. And they have some losses. And then I get some hate mail saying, Matt, your strategy is garbage. Like, I took 3 or 4 losses. And I'm like, yeah, but did you stick with it? Because you should be up here. Or, right, you should be at a new high if you stuck with it, right? However, what happens? Well, these pesky things called emotions sometimes come in, right? And those emotions, we don't really control them. We don't control which ones we have. We can control whether or not we're going to take action on it, right? So you guys want to see another one? This is Roku down crazy amount. And this is 35%. I'm sorry, 65% on a 30-minute chart. You guys want to see what's crazier than that? What about on a 15-minute chart? Ooh, 182%. What? This is one of my favorites. Right, so we had some nice sloping. Obviously, we want to avoid these as much as possible. But if we don't appreciate and take care of our some losses, we can't really appreciate the wins, right? So again, emotions are like waves. They come in. We don't really choose which ones come in, but we can choose which ones to surf, right? You guys are all in winterish time frame there, so I know that's top of mind. Surfing, you guys are waiting for you're waiting for the warmer weather to come back, right? And so in this case, this is a phenomenal, spectacular return. I don't know if you guys have ever thought about, hey, could it really be simple? Does it have to be really complex? And our brain immediately goes to, if I'm not working hard, then I don't deserve it, right? If I'm not in front of the computer all day, every day, whatever returns I make, whatever profitable trades, and I don't deserve it because I'm not working hard. And there's these limiting beliefs that we have that set us back, that hold us back, right? And so this is, I have automated some of these strategies myself. They're not all, MOMO is fully automated. I have a bunch of different ways to do this, to run this. This is something that I really, really love doing, spend lots and lots of time doing, trying to perfect. Again, not all strategies can be automated. However, I do my best to automate as many as possible, right? So here is what you guys are really waiting for. You're like, Matt, cut to the, like, where's the stuff? Where's the goods? And so I'm going to send this, I'm going to send you guys a link to TradingView. I'm going to throw it into the chat box over here. Boom, boom. There we go. There's the link. Henrik is running MOMO on a robot on Roku for 15 minutes for a reason. Yes, sir. That's awesome. So that's kind of the main strategy I wanted to share with you guys. I know a lot of times, especially when you're new, you feel like you got parachuted into this foreign land and everyone speaks this weird language. No one knows what's going on. And it feels like you're the only one who is lost, or maybe feeling like you're behind, you're not understanding. And I promise you, as long as you stick with it, it will get better, right? So Henrik, Peter, they're all like your tour guides. They show you around. Here's what you need to pay attention to. Here's what we'll get back to. We'll touch on it in a few weeks or months. Don't worry too much about this indicator, but it always feels like there is always one more indicator that we can learn. And then only then we'll be successful. Or one more masterclass, one more, right? You always feel that. And I've been doing this for years, and I still feel that way sometimes, but I have to kind of talk myself out of, I know enough to make plenty of money, and I have all the tools that I need in order to be successful, right? And so I just want to encourage you guys. Really, I think the thing I really want to share with you is this idea of being, we'll call it being courageous enough to chase your dreams, right? So I want to share with you guys a couple stories that happened to me. It has nothing to do with trading, and it has everything to do with trading, if that's okay. So one of the things I did was I took a dreams course. So how many of you guys will admit you're over 40? Hi, my name's Matt, I'm over 40. Most of us, especially guys that are over 40, life has beat us up, chewed us up, spit us out. And we have to decide. I remember when I turned 40, I had to decide in my mind, are my best days ahead of me or my best days behind me? And it's a humbling thought to think about, to like, shoot, am I playing the back nine of this golf course called life? Am I on the last half of this, right? It doesn't have to be that your best days are behind you. It's really up to you, right? And there's a reason why our windshields are far bigger than our rear view mirror. And why is that? Well, the answer is simple. It's because where you're going is always more important than where you are. What does that mean? Well, it doesn't matter how big your trading account is right now. What's important is, what are you doing right now, this week, this month, so that you can grow that, right, and become bigger. Now, everyone has had big losses over their career. I've had huge losses. I've told the story. I lost $50,000 US in my very first year trading, trying to learn all this. I made all the mistakes. I paid some stupid tax, and I thought I learned and I moved on. Well, I made more mistakes since then, right? We've all had those ups and downs. You guys can relate. But really, at the end of the day, team, I want you guys to be encouraged and think about, what are the things you really, really want out of life? As you guys know, trading is part of life. It should never, ever be your whole entire life, right? Because real life comes before trading, right? Real life trading. And so I want you guys to think about, what are some dreams you guys have had that maybe you've paused, postponed, maybe you thought it's too hard, it's just easier to just kind of settle back into a life of mediocrity, right? Like, have you guys ever stopped and thought about that? No, there's nothing on the shared screen. You should be able to see me. There we go. Sorry. Here I am. So I want you guys to think about this. So I want to read a dream with you guys, and I'll kind of share this with you here in a sec. But how many of you guys have ever done a really crazy physical event, like I don't know, something like a marathon, an Ironman, something like that? How many of you guys have ever done that? Any of you? So I wrote this dream down it was literally 2 years ago. Okay. Now I'm going to read you my dream, and I'm going to show you a video, and it happened almost exactly like I wrote it down. Okay. So here is, this is my dream. Now, some of you guys may say, dang, Matt, that sounds like a nightmare, but I'm going to read it to you regardless. Okay. I see myself completing an Ironman on or around my 50th birthday. I hear the roar of the crowd and see my wife and daughters cheering me on, being fully present in the moment as I take each step towards the finish line and wipe the sweat from my forehead. being aware of the aches and pains, but not giving them a voice. I feel my heart racing, full of happiness and joy, knowing I've completed my goal. I feel proud, I feel accomplished, I feel amazing, knowing I've accomplished my dream. Now, Matt, what the heck does that have to do with trading? It has nothing to do with trading, but it has everything to do with trading, right? And that is this idea of something you want that is very hard, very difficult, and it's going to take some work, and you're going to sweat, and it's going to be hard, but you're going to keep going, right? So what I want you guys to think about is, what are some of those dreams that you guys had? I had to like reconnect and think, man, I forgot how to dream. Once you turn over 40, like the dream button just, it just like goes, it phases out, right? But let's all turn the autopilot off. Let's flip on the controls. You guys know, you're all in the driver's seat. So sometimes I've felt like I've been upside down in a ditch, but yet guess what? I'm still in the driver's seat. My trading, my finances, my marriage, like all the things that we can control, we have to focus on the things we can control and ignore the things we can't. Now, part of why I wanted to share that Ironman dream with you is I know some of you guys like, holy cow, man, why are you sharing that? That sounds like a nightmare for me. I know Peter likes to run, and ironically, Peter and I have raced across the street in Atlanta before. I don't remember why we did that, Peter, but it was pretty crazy. We're like, let's do it. Yeah. And so again, team, you guys see what kind of clarity I had around that dream? It wasn't just a bullet point. I had some real clarity. And the more clear you are with the things you want out of life, the better. Why? Why does it matter? Well, you can start chipping away the things that don't belong so that you can make room for the things that do belong, right? So what does that mean in trading? Well, if you want to be a next level trader, you have to think about, hey, I need to spend a certain amount of time back trading every day, every week, right? So maybe I can, turn off Netflix for 30 minutes a day, or stop watching TV, like whatever it is that you want to do, and focus and take that same time that you're maybe just letting time pass because you need a break, maybe out of our day, maybe trading didn't work out for you today, but you're able to kind of shift those resources that you have, and you're able to spend time on the things that really matter. You're able to do those windshield activities that move you forward versus worrying about what happened in the past, right? Because we're either repairing or preparing. We're preparing for the future or repairing bad decisions or things that happened in the past, but we have to stop spending so much time looking at that rearview mirror and start looking through the windshield. Make sense? So I do have a video, Peter, of my daughter when she recorded me running down. Let me see if I can find it real quick for you guys. Running down the channel at the Ironman that I did back in September. Okay, yep, I found it. Give me 1 second. You guys want to see this? So you guys remember me, I wrote out this dream, and literally 2 years later, it comes to be almost exactly like I envisioned it, right? I didn't have all the things figured out. I didn't wait for all the lights to turn green before I took the first step. I just had to think about one step at a time, right? Okay, you guys want to see this? I want to share if you guys... Show me the damn video, Matt. Okay, hang on, team. Let me see if I can share the sound with this. Okay, here we go. You guys ready?
Make a noise. Oh. Louder.
You are an Ironman now. Well done.
How crazy was that, guys?
That's
14
so
and a
cool.
half hours later. Now, what happened? I envisioned in my mind 2 years before with some super crystal clear vision, right? And you guys, like when I was reading that, you probably felt like you're standing right beside me, right? And I mentioned my wife and my daughter. You probably hear them in the audio, in the crowd. They're the ones that filmed that. But like, guys, we gotta dream big. It's our responsibility to give back to the world, right? We can't just want to make enough money for our family. You guys have some crazy leadership here. Peter, Henrik, the rest of the team, like you guys have an amazing opportunity to go next level. And guess what? The year's not over. We still have what, 4, 5, 6 weeks left. It could be the best year ever, but we can't think, oh, the year's almost gone, so I'm gonna start hard. I'm gonna go get after it in January. No, everyone thinks that. Why can't you start now? So that's my message for you guys. Hope that was encouraging. Hope you guys learned something. And yeah, thanks for having me.
That was so awesome, Matt. Thank you very much. I love the MOMO strategy, and I really love your attention to the goals and goal setting and reaching those goals. So we have in Denmark it's not a law per se, but it's a cultural thing where we basically tell ourselves, don't think you're something, compared to anything else. So you just prove to us that going the opposite way of this Yandelo, as we call it, is the way to go. So hey, thank you very much, and thank you very much for spending this hour with us. Guys out there, if you have any questions to Matt, now is the time. I know Isabella is one of our coders out there who's been daddling with putting all our strategies into code and trying to make money out of that. So Isabella, if you got any questions, if any of you got any questions, now is the time.
Yeah, Isabel did ask about earnings and Fed speaking. It will move the market sometimes in your favor, sometimes against you. If you're long and the market goes lower, obviously that moves against you. But the strategy that I kind of showed you and the returns are regardless. And this year with interest rate hikes, all that, imagine being short and then getting interest rate hike or earnings that goes lower and it moves in your direction, right? It moves in your favor. That P&L goes from green to really green. And so I don't really, especially when it comes to automation, there's not a simple way to kind of tippy-toe around that. Obviously, if there's some big thing you're not sure about, you can exit early, right? And then wait for, the next signal, but yeah.
Simon asks whether you trade the same stocks and how you find the stocks that are good for MOMO.
Yeah, so I actually have a tool that I built that runs that I use inside TradingView that tells me what works well, and then I'll take those and kind of set them up inside MetaTrader 5 and use bots to trade them. So I do, like all the ones that I showed you, NVIDIA, Tesla, Roku, I do trade all those automatically in my own accounts, right? So, and I actually, I taught a couple funded account or algo classes, and myself and some others actually got a real life trading assessment account. We actually got it funded as well, just using some of these bots. So yeah, it's pretty wild. Yeah,
that's pretty awesome. That's pretty awesome.
So imagine being short over Roku in October,
yeah,
right? And the market gaps down because of its bad earnings, and boom, Peter, thank you for playing. You're funded, right? So yeah,
that is awesome. That is awesome.
And
Cool.
Frederick, the strategy does tell you to sell when those moving averages cross the other way. So if you're in long, they'll cross the other way and tell you to sell. And then you can decide if you only want to do long only, if you just want to do short only, right? That's up to you.
You're gonna add an alert to it also in TradingView so that it'll go ping and whenever you're shopping or walking the dog, yes, or whatever you do, and it goes off. Yeah.
Yeah. So Simon, the bot does all the trades for me. I have I got about $1 million worth of funded accounts set up, and they're all running different different tickers. Yep. Yep.
That is pretty cool. That's we've been running the funded accounts for a while now. I guess since April. None of us has been funded yet, but Henrik has been telling us about the course he did with the mentor group we did with you, and looking forward to getting into the algo part also, as you know, we've been kicked around by the market as it is.
Right. Yep. Yep. So cool, guys. Any other questions for me?
Now's the time, people.
I did get to hang out with this guy this past weekend, Iron Cowboy. I don't know if you guys have heard of James Lawrence.
That's pretty cool.
Dude, in case you think Ironman is hard, imagine, Peter, 101 back-to-back days, full distance Ironman with no rest, no days off, 101 days. And Jeremy and I hired him to do some work with us. He came. He actually stayed here in my guest room with me.
That's awesome. Yeah, I remember you and Jeremy talking about him when we met up in January, I think.
Yep.
That is pretty cool.
So yeah.
Let's see.
When the market goes down. So when the market goes down, you flip short, right? Like it really doesn't matter what happens to the market now. what you might be asking is if you have a bunch of bullish positions and the gap's way down, then of course you're going to give back some of your gains, but you're up so much, it's like, it's not a big deal, right? And then it'll flip short and goes, and you continue going in the same direction. But how did I come up with MOMO, Simon? So I was trying to figure out, how do you predict things? And I stumbled upon this fact that you can't really predict, not in an automated fashion, right? So then I came up with, I thought, you really have to determine what the trend is and then go in the direction of the trend, right? So up escalators, you want to go up the escalator, and you can run down an up escalator, but you got to be quick. You can't just, that'll wear you out, right? So that would be considered counter trend. So a lot of experimentation is the short answer. Do you trail the stop? I don't. My system automation doesn't. I'm trying to work on a slightly different version, like an upgrade that we can test. We can go back in time and test to see what would have worked best. Sometimes those trailing stops do protect gains, but sometimes they kick you out of a trade early if it's got a little bit too much volatility come in, right? It'll kick you out and then run higher without you, right? So you have to kind of weigh both of those, but yeah.
That's a classic.
Yeah, cool. Well, I'm here, team. If you have any questions, Matt at reallifetrading.com. Happy to help.
Cool. Awesome. So Thomas asks, when you go 30 minutes versus 78?
So I have a tool that tells me what works better on any specific stock. So that's the short answer. Yeah, I can let's see if I can share this with you guys. Let me just show you real quick. Are we okay on time, Peter?
Yeah, no problems. Yeah.
So this is NVIDIA on a 78-minute chart, and this is a tool that I built. This isn't a free, but this shows you be down 19%, and we're looking at a 78-minute chart, right? So you're like, okay, great, Matt, that's lovely. So then I'm like, okay, what would happen if I ran on a 30-minute? Well, 30-minute, I'd be up. This is kind of what we're talking about. Is you'd be up about 32-33%, and it does not count the current. This is only realized gain, so you guys will recognize that we're short right now and we're going lower, right? And so if you were to look, you'd say, okay, so there's kind of an open P&L of about 4%, so to speak, on this lower move that hasn't yet been added and closed and added to this running tally here. But yeah. That's the short answer. I got tools that tell me this kind of stuff. So if you guys ever wonder how the heck did you pick Roku 15-minute, it was not eeny, meeny, miny, mo. It was a lot of tests, and it's a lot of work. And I'm hours and hours of work. I'm just giving you guys the answer to the final exam, right? You have to do the work. I'm sharing that with you. So
that is so cool. Yeah, I guess we need to put Isabella and Henrik to work making screeners like that, so that we can find the right stocks as well.
Sure. Yeah.
Hey, cool. Thank you very much, Matt, for doing this. I really appreciate it. Well, I'll guess I'll be seeing you at some of the meetings or whatever we're doing soon.
Yep, sounds good. Thanks, guys. Have a great rest of your day.
You too. Bye.